I'd like to welcome my very special guest, former ECB President Jean-Claude Trichet, and I want to get right into it. I want to discuss reversing the grand experiment. Some say it saved the world. Some say let's see how it ends before we weigh in. But specifically, Mr. Trichet, we had Jason Furman, a former advisor, economic council advisor to President Obama, on our air saying that a big chunk of the good trading in U.S. stocks in particular has been the low interest rate environment. Well, rates are moving up and the equity markets didn't like it. Europe's equity markets are all in the red, as are China. What does this mean, in your opinion? Can equities get along with rates, and what does it mean for Europe's equity markets?
Well, first of all, I would say, Rick, that we are in a universe, of course, when market goes up and down. And it's always very delicate to comment in real time on moves of the market. There are two interpretations on what has just happened. Either it is a healthy correction because we had the augmentation of the asset values, which has been very, very important, very significant. So it's not bad that you have a correction at a certain moment. And it is always what happens from time to time. Another interpretation is that it is the start of a big correction, something like a new, I would say, trend on the market. I will remain very prudent and cautious, I would say, on the short-term basis, taking into account all the fundamentals that we have in front of us. I would say the likelihood of a healthy correction is higher than the likelihood of the start of a new trend, which would be downward. That being said, on a longer-term basis, if you take the medium-term perspective, then, of course, at a certain moment, we will have another trend. And a number of elements are suggesting that things at a certain moment will appear to be clearly indicating the new trend. I would say myself, I'm particularly alarmed by the level of over-indebtedness that I observe in practically everywhere in the world. You know, the level of leverage, public and private, in all economies practically is very high and continued to be higher and higher after the crisis. But that is for the medium term. But it's a reason to be very vigilant, obviously, and to take what's happening, what happened yesterday and the day before, as a useful wake-up call.
Excellent. Listen, Mr. Trichet, a big question. In the U.S., we have a very clear federal government overstructure. We understand who guarantees our central bank and all its holdings, which are guaranteed by the full faith and credit of the U.S. Treasury. In the European Union, it's a lot more complicated. A simple question. Who guarantees the balance sheet of the ECB? And if it's based on the capital key, which means the proportion of the securities of each country the ECB purchased, that's not good for indebted France and Italy. Your final thoughts?
Well, first of all, I would say that we are in a different universe in the US and in Europe. In Europe, the central bank, and it is the European tradition, has an enormous level of capital. That is the property of the bank, of the central bank, of the property of the euro system as a whole, with an enormous amount of gold, with enormous amount of, I would say, securities of all kind. So you have to take that into account. The ECB is extremely solid in terms of capital, and that is, again, the tradition in Europe. On top of that, of course, you have the various capital key of the various governments, which are there as a last resort. But the likelihood of being obliged to ask the government to cover possible losses of the ECB seems to me zero, to be frank. And you have to know that until now, all the purchases that we did in my time with OMT, in the time of Mario with QE, have been extremely profitable for the bank. Extremely profitable. We made a lot of money because, of course, we purchases on the basis of when we had to fight against the speculation, the purchases were at a low level, and of course we gained a lot when we had to recover the value that was behind these purchases. So I only mentioned that en passant, but I have no problem, I have to say, as regards the solidity of the ECB.
All right, Mr. Trichet, I really thank you. The only question, of course, we'll have to discuss next time is, are all the assets that are being held, especially by the regional central banks, worth their advertised value? That's the question.